Investing Lesson 6, Investment Strategies. In this lesson, you're going to learn about the four main investment strategies. Having an investment strategy that's in line with your personal and financial goals can help you make the right decisions on how you want to invest your money. At the very least, you need a strategy that will beat the rate of inflation. As you learned in a previous lesson, the value of money today will be worth much less 30 or 40 years from now because inflation eats away at the value of your money. $1 million in 1980 was not the same as $1 million today. And in fact, $1 million in 1980 is the equivalent of $3,600,000 today. That means if you kept that $1 million from 1980 in a savings account without ever investing it, it would be worth just barely over $230,000 today. Having an investment strategy should not only help you beat inflation, but also grow your money over time. Investment strategies are plans that are designed to help people achieve their short-term and long-term financial goals through different methods of investing. The strategies vary from highly aggressive to conservative. They all have the potential to make money, and they also have the potential to lose money. Your investment strategy depends on your age, how much money you have, your risk tolerance, goals, and how long your money will be invested. There isn't a one-size-fits-all investment strategy. Just because you might like a strategy right now doesn't mean that you're going to stick with that forever. You may need to reevaluate your strategy as you get older to make sure that it's still aligned with your goals. Like we mentioned in the last lesson, you don't have to figure this stuff out on your own if it's really not something you're comfortable with. You can always hire a financial advisor or a robo-advisor to help you figure it out. When it comes to investment strategies, a 401k is typically pretty limited. On average, there's around 8 different investment portfolio options that you can choose from. Some people don't mind the limited options because the more choices you have, the more difficult it can be to choose which one is going to help you reach your financial goals. However, limited options also means limited control over how you invest your own money. Unlike a 401k, an IRA usually allows you to buy individual stocks, bonds, ETFs, mutual funds, and other types of investments. The 4 investment strategies we're about to cover can all be used within an IRA. The first investing strategy is called active trading, also known as day trading. With this strategy, a person buys and sells investments for a quick profit in a short amount of time. These investors try to time the market by buying shares when prices are low and selling shares when prices are high. For example, let's say you bought 10 shares of a company yesterday at $10 per share, and they're worth $13 today, and you could sell them and make $3 profit on each one. The next investing strategy is called value investing. With this strategy, a person buys a share of a company that's temporarily trading at a lower price than it normally sells for, and then they hold on to it for the long term. Value stocks tend to happen with mature companies who have a stable performance history, but they're going through some kind of hard time financially or perhaps some bad public relations. For example, back in 2017, United Airlines oversold the seats on an airplane and asked a doctor to get off the plane because they didn't have enough seats. Footage of the doctor being dragged off of the plane, kicking and screaming, went viral, and the company almost immediately dropped by $1 billion in value. However, if someone bought shares of their stock during that time, they would have gotten a bargain price because United Airlines stock value went right back up within a few months. The next investment strategy is called growth investing. It's an aggressive long-term strategy that's high risk, high reward. A person buys growth stocks in new companies whose profits are expected to go up faster than the overall market, and these new companies tend to be in industries that are experiencing massive growth, like the technology industry. For example, someone using growth investing may have bought shares of Tesla back when the company was brand new in 2010. Until that point, electric cars weren't cool. But Teslas were sleek, fast, and quickly became a status symbol. Since then, Tesla's gone on to dominate the electric vehicle market and created huge profits for their shareholders. The company's gone through a lot of wild swings in value, which is normal for high-risk, high-reward investments. The final investing strategy we're going to talk about is buy and hold investing. Buy and hold is a long-term investment strategy where people buy stocks or other investments and hold them for long periods of time, sometimes decades. For example, If someone bought Apple stock back in 2002, it would have only cost 22 cents per share. In 2009, it was worth just over $6. And in 2023, it's worth over $130 per share. Any of the four main investment strategies can be done in a more or less aggressive manner. It just comes down to your financial goals, preferred tactics for investing, and how long you want your money to be invested for. No matter what investment strategy you choose, it's extremely important for you to do your research before you commit your hard-earned money to any type of investment. In the next lesson, you'll learn about the order of operations for investing.